Well, it's finally happened. The stock markets around the world have started to fall. And with big red candles like this, it might be showing us that things are just getting started. Remember, the close is key. And for investors and traders around the world, it's time to pay attention to these markets. We saw Tesla hitting massive highs as the squeeze continued in calls. Is that over? We'll be talking about it. And of course, we also know that there are several concerns by the markets on what central banks are doing. Canada just rose rates. Australia's done it this week. Does that mean the Fed will do it next week? We've got the latest economist news on that. Fear and greed topped into greed at this point, a 75 reading on the clock. And we know that that usually spells disaster for markets. So let's talk about what's happening and really look at the positives and the negatives for stocks, commodities, and cryptos. Well, welcome back everyone to The Daily Show. It's great to have you here. If it's your first time joining us, we cover the latest news, macro data, lead indicators, and of course the hottest charts. Make sure you subscribe for all of our daily content. And of course, if you enjoy our content, make sure to smash that like button. It really does help us out. Let's begin with the discussion of why the markets were down over the last 24 hours. A simple question and answer would be probably central bankers. Both the Reserve Bank of Australia and now the Bank of Canada both put their rates up in surprise moves, 25 basis points. We've been following that recently, and we know that economists have swung between the Federal Reserve raising rates to not raising rates, and now they're going back up to next week's rate decision being a 25 basis point hike. Let's discuss some of the other problems in the market right now. Everyone's talking about Treasury bill issuance. As you may be aware, we've got $1 trillion coming up in terms of new issuance, and some people are concerned over whether the market's going to take it. I believe they will. I think there's a lot of cash on the sidelines, and I wouldn't worry too much about Treasury bonds. However, we need to, of course, pick the right prices, and we'll look at those a little bit later on. Another one has been gold. So gold's in the stories at the moment. We've looked at bullish case scenarios. We've obviously looked at bearish case scenarios. These raising of the rates, especially now from Bank of Canada and now possibly the Fed, put a lot of downward pressure on gold. I've talked a lot about how gold is actually very susceptible to interest rates, not in the way that you think. And sometimes if you have a rising interest rate, it can be negative towards gold. And I believe that has a lot to do with what moved the markets over the last 24 hours, especially in that metal. What about the fear and greed index? Well, right on time, we hit extreme greed, and on the same day, we sell off close to 2% on the NASDAQ. Any surprises? Probably not. We're hitting those types of peak highs. And of course, we're about to see some interesting survey reports. Watch our next daily show as we break down what retail traders have been thinking throughout this week and whether we just hit a max pain level in terms of everyone getting too much FOMO in these markets. If it's your first time here, or even if you haven't followed us, I shared some interesting observations over on Twitter. One of them was, of course, potentially the end of the Tesla run. So many calls over the last 24 hours. We mentioned this first over on May 23rd, and it's been basically just a huge amount of call runs. And that's been really what's running this market right now. 0 DTDs ruling the world. 220 got hit, first target. 230 just got reached in the last 24 hours. Could this be close to the end here for Tesla? We'll look at the stock a little bit later on. Another thing that's really notable is, of course, the amount of puts coming in over the last 24 hours. We'll look at this later on, but it has been mostly 0 DTEs pushing it down. You'll notice of the kind of top 6, 4 of them are puts, which is usually, a negative sign, and obviously markets move that way. So why could markets actually be in for a proper turn here? Well, a lot of it has to do with peak FOMO. We saw this Goldman Sachs report for SPY call volumes, which we've been talking about, and we hit all-time highs this week and last week, 700 billion. That's a ton of calls going in, and we saw upwards of 62% of all of the options trades being calls. That's a huge difference from where we were only a month ago, where puts were really reigning supreme. So sentiment has certainly shifted. The other thing that we've seen is a massive non-commercial E-mini futures short that's been going on by the big traders. I've mentioned this several times. I always put an update in our weekend videos, and we've been talking about how they're just super short. They're now so short that they better be right, because otherwise they're going to be really, really wrong. And you can see they're shorter now than the time during the global financial crisis. Now, you might be saying, well, wait a second. If everyone's short, how can the market go down? Traditionally, this is a different way of trading it than, of course, the puts. And we do need to remember the puts currently are sitting at 400. The market is still much higher than that. So really, there's a lot of room to potentially drop here into the most hedged event, which is next week. And we'll show you the most hedged event by looking at this chart. This is what we basically call a vol curve. And we're looking here at a vol structure on this market, showing you that this week is not necessarily super hedged, but next week into basically the 16th is super hedged. So whatever drops here, you've got to kind of expect a bit of a pickup as we go into a super hedged event and then start to drop hedges after the middle of course, June. And I've been talking a lot about this in our private community. I do a macro kind of private look ahead where I really focus in on medium and long-term kind of investing. And we've had this vol curve for a little while and basically been talking about this being super hedged. So remember, there is a big hedge, but the hedge is lower than the current market valuations. So 4,300 remains a critical big resistance at this point. If you're an investor and you've chosen to watch this channel, then of course I always say to investors, you've got to be very patient and you've got to wait for your zones. Now, what that means is, of course, if you're looking at technology right now, you might say, damn, I missed some of these good buys. I'm not really too worried about that. Neither, I don't think, should anyone really be. Generally, markets do come back to forward PE valuations. We know that 16.8 is the average. And just remember, standard deviations away is not really a great way to invest. You want to usually be looking at the low end, somewhere around 15 and a half is an excellent kind of forward PE valuation to have a look at. And you don't want to usually be buying these points as an investor. As a trader or a swing trader or anything like that, you don't care. But of course, investors do care about these numbers. Is it cheap right now? Not really. Is it expensive? I guess you would say it's probably a little bit too much, especially in some of the AI tech stocks. Let's move over to sentiment votes. We'll get an update here on this one. I'm suspecting that bears have dropped, neutrality is ruling supreme, and I think bulls will be somewhere around 30 to 32. Let's see how good my predictive powers are on this one when we get the report back this week. That'll tell us, I think, a little bit about whether this market could actually enter into a swing trade short or not. And while it's only one piece of the puzzle, it does help us predict in some ways whether a swing is on rather than just more of a scalp or day trade. Where are we in this time of year? Well, we're sitting in the June kind of period. We know that we don't have usually much more to go until we enter the Q3, which tends to be the really bad time of year for markets. Is it going to be horrible this year? It depends what the Federal Reserve does. Remember, we do have a central bank indicator that we'll share later on. When we look at the federal debt limit changes, you can see here that we're basically sideways to down, usually after they change the debt limit. That's something to keep in mind, and we always bring it on the stat. So where did we get the inkling that markets were probably going to sell off? This is the chart here. And this is basically a whole bunch of the biggest tech stocks. And I've built them together into a chart to show you the indecision. All of a sudden, we saw a monster sell-off, and that pushed right into these lows. Now, have we seen a swing change of trend? No. Did we see a sell-off? Yes. And if you were going to take this one, as it broke through that low here, that would have been an excellent kind of pickup for the rest of the session. You can see how aggressive the sell-off continued to be. S&P 500 also gave us a first time frame change of trend, which we'll look at later. Another thing we've been focused in on is the switch from technology into other sectors. We saw that about a week or so ago, and it's been one of the better trades in the market. Going into other sectors has been much more profitable than technology, and the reason is we're just hitting those kind of peak FOMO levels. We've also got the skew. Now, the skew got crushed, which was great. That was certainly a predictor that maybe the SPY signal was pretty good for at least the day trade. But I don't want to see this go up too much more. We basically want crushing that continues similar to some of the other times. Here's August. Here's April of 2022. We need skew to kind of turn back around. So not go up too much more and start turning to the downside. And that to kind of show us that we don't have this instantaneous put reflex in the market. The problem at the moment is every time the market sells, even in one day like this, is everybody is buy the dip on stocks, but everyone that's bearish is always so let's jump all over the puts and get inside of them and really push it. We have to hope that a lot of bears got taken out. Otherwise, it's going to be difficult still to sell off. Some promising signs, this one here, PCC. Now, we've seen the put-call ratio continuously be low. This happened usually around 1 to 2 weeks before a swing trade kind of started to come through. And it's a good first signal along with the skew that markets are actually considering a turn. And that doesn't mean we need to be negative on everything in the market. It just means that maybe the tech stocks have found their temp highs here for now. And we'll look at those later. The volatility of the volatility continues to show us that TD13. We know that that leads into usually a VIX kind of spike at some point in the future, though we don't expect the VIX to spike until that vol structure changes. So we really need a pretty large move on vol structure. I'd be looking for something around the market to basically do it sometime probably after the hedges are off next week's OPEX. So next week's going to be an interesting point. We could easily go to 410, but I don't think the market can get crunched underneath 400 very easily. And we'll talk about that soon. Also, I'm not sure whether the VIX will be unpinned. So at the moment it's very hedged up. Remember, the last time we hit this level, we saw a super volatility come into the markets. That could be more of a coincidence than anything else. But our analysis on the Dow Jones Transportation Index and Dow itself usually showed us in the last 2 times over the last 14 years since it's happened, we only had 2 times, and both times we got a squeeze into a dump. Well, it does sound familiar at this stage. Are there some positive signs? Yes, percentage of stocks above 200-day averages are improving. So that's breadth starting to come through as we see rotation. Certainly for bulls, they'll like that. For the bears, it's good to see at least 1 day down in central banker liquidity. These central bankers, while they've been tapering off, and we'll show on our weekend video the difference between the tapering and where they're at the moment, you know, they're being sneaky. There's no doubt. Both indicators here, even though the cues are way too disconnected from reality, we do know that the Fed is still back-ending this market a little bit too much, and we really need to see that drop off if you're going to get some type of substantial move to the downside. What about SPY? Well, when we take a look at SPY versus the dollar's been quite strong. It's actually holding an interesting point here. We saw a sell into a buy. We'll talk about it later. But generally, if the dollar's been strong, it is precursored the market usually having a bit of a flurry to the downside. No signals yet coming from that. Let's look at some of the individual stocks we've focused on over the last week. Disney's been one of them. We saw that nice island reversal, and it was up in a day that was down. So it just shows you that being in the right single stocks or sectors right now has paid. Another one we've been focusing on the last couple of days, thanks to members in the community, you guys that join us on the Monday live streams, join us 1 hour before the market opens. We always do a free public live stream for that. You suggested SoFi this week, and I kind of agreed that it was in a bit of a ramp, and we've seen some nice 0 DTE options. That's what's happened. Buy calls have come through. We've kind of hit like what I would call a target there, which is about $8. That's going to be a hard, well, at least a soft target. The next level, if we continue to see huge breakouts on this market, is $9.82. But I did notice over the last 24 hours for PLTR traders that we started to get a significant number of puts come in, and we targeted this zone. So see that big sell-off there that happened? Let's measure the switch here from the top to the bottom. That's a 15% switch. That is symptomatic of blow-offs. So I'd be very, very careful myself in this type of PLTR trade. You do whatever the hell you want. Of course, it's up to you. But yeah, I've seen that play out before. And yeah, that's not really the sign. I think you'll probably see some recovery, but it'll be like kind of like that, or maybe like a high steal. I would say PLTR is over based on the options that we saw. A few nasty puts coming through from the bigger players out there. Let's move over to utilities. A nice defensive move here. And it took out the high, bodes well for defensives finding some strength over the next couple of sessions. And again, if the markets do take a new low here and then start to recover, if defensives keep doing well, other than just utilities that you'll see soon, that's usually the markets going in on some kind of defensive turn, which is something that you're looking for in these markets. We mentioned that 4,300 is most likely a bit of a structural issue for the markets to get through. This is one of the ways we did it. We saw all these sell call options. Basically, people were opening them to get credit, and these weren't just normal human beings. These were Wall Street's nasty robots. Look at them floating all over that 4,300 level, and we've talked about that quite a lot. Let's move over to the slot show, which is options at the moment, and there are a lot of significant trades that have gone on in the last 24 hours. You can see here relative to 90-day volume average, there's a couple of big standouts. We're still seeing PLTR getting a lot of movement on it, but notice the call volume sitting at about 800,000. Then we've got 454,000 puts. I think the bigger players may have started to move into the puts over the last 24 hours. Time will tell. Obviously, risky trades there. huge volatility spikes, etc. We also saw Disney kind of finding itself some large puts continuing to come in on the 160 strikes, which we'll look at, and 110 strikes. That could be still forming a base, I believe, for Disney. And of course, we've been following the stock a little bit, and no doubt that Tesla was the trade of the last 24 hours. It went all the way to 230 and then sold off, but it was a big level. Let's go down, still 56% calls. Great news if you're in the market. A 48.5. Wow, options day. That's a big day, guys. 48.5 compared to, of course, 40 mil general. And if it's all calls and they're calls on a down day, that's usually showing that you've gotten rid of that instant reaction as much to buy all the puts. Buy the puts, that's what they say. But yeah, it seems like it's buying the calls. Everyone's on the call wagon. Let's move over to the biggest trades on the indices. You can see here the positions, put call ratios across the board, just so you can pause it there if you're interested. And we'll move over to this one here, which is, of course, the SPY. Now, I shared this on Twitter. Again, of the top ones, there was a decent smattering of puts. I'm looking for some longer dated puts on the SPY. There's not too many coming through. You can see in here, you're starting to just get really more of those 0 DTE kind of things. And for the end of the week, we'll be watching that very closely over the next 24 hours and, of course, updating you. Tesla was the strike, though. This was wild. Calls everywhere, 230s, 235s. There's a call fest, and the biggest volumes were mostly calls. This helped to push the position up. You'll notice there was this little solitary PLTR call, but if you scroll down further, there was a bunch of puts coming through on this market as we scroll down. So we had 16 puts, another large position coming through, and then it keeps going for PLTR. We have a little bit more puts coming through here. Again, they add up to more than the call. More puts, a little bit of call. So again, counteracting. I think there's another put. The bigger players definitely stuck on the puts, I would say, over the last 24 hours. We'll see what they do. Disney also 160 long date puts. Interesting to see those appear on this chart. Not the first time we've seen it. What are the economists saying about this market? Well, they've switched again from 1 month ago, 8.5% chance of a rate hike to 60% chance to 20 again, and now back to almost 40%. So no one has any idea, let's face it. On balance, I guess you would say the Fed would probably hike. I mean, Bank of Canada, of course, RBA, maybe the Fed need to do it. I'd be interested to see their dot plot. We'll update you here. I mean, it's going to be a very interesting next week. Inflation numbers, how sticky is it? Every other central bank seems to be struggling. So at the same time, will the Fed show the same things? Let's have a look at the last 24 hours. It was some of the most hated sectors recently doing well. We had, of course, regional banking coming through very strong on that re-pickup, utilities being the standout defensive, but the other defensives notably weren't coming. And of course, anything to do with gold and technology was in the sin bin for the day. It wasn't doing so well. If we go to the 5-day moving at like kind of volume, you can see here, it isn't what you might think. Technology is actually down on 5 days. Staples barely up. Utilities doing pretty good, which is my favorite of the defensive sectors at the moment. And then a whole bunch of markets that have been actually selling off due to demand destruction, starting to come back a little bit stronger. I'm wondering what happens with metals. Of course, I've been short metals and short energy, and I told everybody here about it a little while ago that, well, coming into June, I wasn't so sure about that trade. Obviously, the end of May was kind of the drop for that. I still think that they will sell off due to demand destruction. This is probably more of a dead cat bounce. But nice moves there on energy and metals over the last couple of days. We will still focus on those moving forward. So just before we jump into the charts and we take a look at all of the key levels we should be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, as many of you may be aware, we always talk about Microsoft on this channel. It's my favorite stock. And I've managed to secure for the Australian and New Zealand audiences out there an additional $50 worth of Microsoft fractional shares. But wait, it doesn't really stop there. Why do we like Tiger Brokers? Well, not only have they won many awards here in Australia and around the world, but they also have a really robust desktop and mobile trading platform. And the most important thing right now that we've been discussing on this channel is rotation. I mean, let's be frank, it's one of the biggest things of 2023. And if you've been a bear, then metals and energy have been the places to be into, except for recently. And then, of course, if you've been bull, it's been semiconductors, technology, etc. Now, something big happened over the last 24 hours. We actually saw all the technology stocks basically get sold off. And you can see it on this big board. But more importantly, things like utilities and defensives in general, we're finding some green. So remember, there is the tale of many different markets out there. And as you go through the last 10 days, you'll notice that semiconductors are still up a hell of a lot from where they have been. But realistically, there were some sectors that even 5 days ago were starting to show the signs of recovery. Most likely utilities was one of those. And we've been discussing it here on the channel. So how can you find this? You can go over to the US platform section of your Tiger Brokers. You can go to the heat map. You can also go to industry codes and concepts. And what I really like is often we don't know what stocks are actually in these industries. So if you want to know what some of the biggest stocks and best stocks are in semiconductors, you can click on the semiconductor sector and then notice all the stocks, see how they've changed, and then of course, have a look at them on the charts within the platform. So what are you waiting for? Check out Tiger Brokers today. Links in the description down below for everyone around the world and in the available countries. All right, well, let's jump into the charts and we'll start here by discussing some of the things going on in the markets right now. Here is basically a chart overlay of treasuries versus the S&P 500. And if we scroll back a little bit, you might notice that back in 2011, we saw a very interesting point. Of course, you saw this issuance issue where everybody was freaking out over the markets and the debt ceiling and everything. And then all of a sudden, treasuries went wild. Now, that's going to require, for treasuries to go wild, you're going to need rate cuts from the central banks. And I'm not sure whether we're going to see them anytime soon, but it's an interesting kind of overlay. And I'm not too concerned about treasuries. I do think that they're probably going to come back down and float around 100. I do also believe that they are not a trade. Instead, they are more of a multi-month concept, if not investment concept. And you've got to be very careful about these zones. I think these are the three kind of zones here, somewhere around 96.40, 100, and possibly 89 being a super low. And the super low would push us into these points. And at that point, I'm going to have alerts set there. And I'll mark that up on the charts in the future if it was going to occur. Let's have a look at the US dollar. So the US dollar is kind of struggling to short. This is certainly still in our short zone. We've talked about this quite a lot. I wouldn't blame you if you didn't get the perfect price on it, potentially being broken even on a short. We took a low, which is usually a positive sign, but then we reversed that and came back up here. Are we in some kind of distribution or accumulation right now for the dollar? I still think this is if it's going to turn, it's still the turn point, but have a look at these dojis and rejection wicks. The market has absolutely no idea which direction it wants to go in just yet. We know it's a critical supply and we'll continue to follow the story of the DXY because, really, it's probably in some kind of distribution, but we'll have to continue to follow along with it. Let's move over to gold. So this was probably a disappointment from some people over the last 24 hours. I think a lot of it has to do with yields. So we'll look at those in a minute. We dropped back down to here. We took this high. We are unable to break through the critical resistances yet. And we do want to be looking also at the largest players. Have they actually started to pick up gold yet? And we will have that result on the weekend. So we'll know whether the big commercial players are actually buying this stuff. And we don't know yet. Price action would dictate probably not. But if we take the low again, then I believe we're going to like kind of that 1920 zone on gold. And at this point, we sold off from taking this high and we're kind of finding a little bit of a bounce. Dollar index will be important to gold. Also next week, I expect it to be very volatile into inflation and also the Fed rate, because those are going to have a lot of impact on gold. So that's probably why it's holding this zone at this point. A heavy traded zone remains still the supply or resistance. And down here, obviously, is where the buyers are at the moment. So gold's kind of at that pinnacle point. A lot of people have asked me about oil. Oil tends to do okay if we stabilize on rates and go up. If I was looking at this, I would say oil is trying to bounce and go maybe towards most traded zone number 1. That is find further strength. I'm not trading it. I'm just waiting for a moment. I'm updating you here, but I don't always have to have too much of an opinion on it. And I think this is mostly, if I was going to pick a direction, I'd be going up, even though I'm negative biased on it. And that's just because that smaller time frame stuff shows you, and the way it's been sitting here shows you that there's a real chance that this is too noticeable as a supply or a short now. And because it failed here, it really pushes towards that idea of maybe breaching out. I think it'll sit until we get inflation numbers or unless the market preludes them. Let's move over to metals. Good rejection on copper. So metals could be turning back down again. Nice shooting star. Obviously need to follow through on that one. And we're waiting for this to come on down. Let's have a look at the smaller time frames. We'll go 15 minute here. What you'll notice, I just drew a trend line through these and actually breached that trend line. So looking for basically copper to continue to find weakness. That shows us demand destruction with weak Chinese figures coming out. You would think they're going to probably stimulate the economy again. And most likely weak Chinese figures should put pressure on the downside of metals. And something that we've been talking about quite a lot. Oh, Tesla. So it hits the 230 level. I've got a mark out here for 237 as well, just in case it gets super extreme. Yeah, this could be at a very interesting point. You can see how it's just super extended away. Now, when it extends like this, it's not unusual for Tesla. It loves doing these types of runs. If you go on a weekly, you can see that is 1, 2, 3 with an extending large kind of candle base that usually points towards a rejection very soon. And 230 was a big target, 220 first huge target. I've warned against this technically other than just following that 0-day TE now for a couple of weeks. Do we now enter the technical turns again? Now, the reason I say that is because we came out so strong. We gapped up and we built a position. We saw those calls wild everywhere. If we gap down on the session, do we get an island reversal? Is that worth a go? Fighting trend is always like a 50% kind of coin flip. But in these situations, because of the extremes, the chance of a 2-to-1 payoff is probably fairly high. If it does happen, you got to proceed with caution. I'm just showing you a technical. If it does open with a gap low, then it technically is an island reversal at a very good resistance. So we'll find out whether that does it. What about Apple? It's usually the canary. It took the high, giving us the good love story. There were goggles. There was $3,500 plus probably accessories of $700 charging cables. That's what Apple came out with. I'm actually excited to use that product, but I think it's probably just like the iPad 1. It'll take a little while to find its footing. Be interested to see if anyone in the community has tried one, if you've even been able to try one yet. I'm not sure. But over in this action, in terms of the markets, we've seen a bad looking candle. That's a nice rejection. No new low yet. Obviously, swing trade is waiting for 170 to be taken to the low. But yeah, this is pretty much in line with what we've been discussing. A rally, which we got, into a sell. Now, the rally didn't quite go maybe as far as you'd hoped. Actually, no, it didn't go quite as far as you'd hoped. So it just came up here and just instantly sold. New lows, though, could be forming. And if we remember, we had a gap here. So if we get a gap and the markets start to sell off in futures, that could get us back down to our trend line. And then we'll have to talk about what happens there because, yeah, Apple's certainly starting to show a little bit of weakness after so much great news coming out for it. Same kind of thing for the DAX, floating around, looks weak. No movement there. It's just kind of floating. XJO still looks pretty bad, but no new low being formed. We need a new low so we can get 69.50. Still negative on this market. Bad day close for it in the previous session. Metals did okay. So if copper fails, expect that the ASX 200 will struggle. If we move over to the IWM, the US 2000, congrats if you were bullish on this. Certainly an interesting TP zone. This is our stack that we had from the last 24 hours. And yeah, it's build up like this. Goldman Sachs coming out and saying, this is worth nothing. That's what they pretty much said. These stocks are terrible and we shouldn't be buying them. Is that just them wanting to fill the bags? I don't know. But yeah, certainly we're in a zone where if the bear's going to take control, everything's kind of lining up. Notice how over the last 24 hours, you had a strong Russell, a weak NASDAQ, and a semi-weak S&P. I mean, the tale of the three markets continues. This is the funny thing about 2023. You don't usually see this much differential. I mean, this was up a lot. I mean, you take the percentage here from the low to the high, you're talking about 2.26. And as you'll see in a second, the NASDAQ wasn't showing anything like that. The rotation was real. 2.42% on the NASDAQ. I still think that mean reversion is more than likely, which is back to the 20 moving average. That would actually push this market at some point soon down about another 9. So yeah, I'm sure some of you would be salivating over that. Wouldn't be that exciting. We're only back about a month, but Anyway, that would push us back into this demand range. And of course, you would have to expect buyers to be around that level. Now, do we take a low yet? We haven't done it. Let's have a look at the futures. Let's check those futures out. You can see here 14,212. If we get a new low, well, then we're starting to talk about swing turns. We're starting to talk about that daily or that weekly 20 moving average. And obviously, they've got a couple of key levels. You've got around this 13,000 level, and then you've got all the way back down here when it comes to a very interesting structure around everything that was built through 12,000. I'd be surprised to get through that very easily. So markets showing signs of sell-off, showing closures, which is more important as well. Look at the closure on the low. Closures on the low are significant. They make a big difference. When we close on the low on the daily, then you generally will get a follow through. You can see here closing the low, follow through in the futures. Closing the low, no, it didn't happen there, okay? So it's not always, but in general, you are looking for these closes on lows to kind of show you that the market, it means serious business. Now, the S&P had a good one. It actually came back up and almost stopped out our first time frame change of trend, but it didn't get us, okay? That's pretty cool. I saw a few people sending me messages and sending people around some of their trades. Congrats to people, I guess, that hold their nerve. I kind of had a 43.06 on this as a stop to make sure that gap was protected. And of course, this is more of the entry point, not necessarily up here, but I saw a few people to the pip kind of selling this thing with like a 2-pip stop loss or a 2-point stop loss. That's wild. You guys are going to lose that a lot, but congrats, making your 10 to 1s or whatever you were doing. And the market sold off into the lows. So no new low yet. If you get a new low, then we should be able to quite easily, I would think, go to 42.40. There's a little doji here, so that's going to probably be some kind of buyer. And then the real turn for a swing would actually be around 41.75. So it's going to be difficult you're not going to like that because it's over 100 points down. But I could see something like this occurring. OPEX kind of expires, comes up after, something like that. We'll see what happens with central bank liquidity. Obviously, it's a very real possibility. We are at an extreme. If we didn't take the low, let's say we move back up, 43.25 would be something I'd want to see taken. And then this would also instigate a short. So again, it always pays to be patient and react to the market showing us what it's doing. At this stage, you'd have to say, with the weight of evidence, we'd like to see a new low being formed. And that dip reflex of buying the dip is certainly in. You can see it with the options, the PCC, etc. It just didn't explode the way you would usually see it during most of the other months. So people really, really like buying the dip right now. Let's move over to 400 puts, which are next week. We know that's a wall that's impenetrable, but we have 420, 410s with a max pain at 410. This is the only week we use max pain. 3.5 million contracts. That's a lot of money. There's trillions expiring. There's serious amounts of news, and there's a lot at stake. Bitcoin found weakness off the most traded level. Not much to report on this one. I guess I'm still negatively biased on it. I want to see 24K. So we'll find out whether that happens. A lot of people are messaging me, look at that big bull candle. Well, yes, you could say this is the turn for potential bulls, but at this stage, I'm going to believe the daily close and say, that thing looked pretty weak. Let's go through some of the news. And it's not really for this week that I think is important. There's not much going on. It's next week that matters. We have so much. Not only do we have bonds being auctioned all over the place, but or treat T-bills. Then we also have core CPI. Thursday, of course, is also a T-bill day. FOMC rate statement and funds rate. All that stuff's coming through. Then we get the PPI and the core retail sales. And then just to top it off, we get the prelim UOM consumer sentiment, plus a Bank of Japan press conference, plus an ECB. I mean, next week is Economic News 101, and it is one of the most hedged events of the year. But of course, it's pretty well hedged down in those 400s and 410s, not necessarily hedged that much up here. More so the 4300 might be hedged off a little bit more than anything else. If you enjoyed today's video and you found some value in it, then of course, make sure to subscribe, join the community. Welcome. We love to have you here. And I hope that you also enjoy some of the free things that we offer. A few cheat sheets, our Twitter service, of course, where we can tweet some of the interesting charts of the day. Come and follow us in the links down in the description below. And remember as well that we always say thank you to our sponsor of today's video, which is Tiger Brokers. So they help us out to produce this show all the time. And if you're interested, especially from Australia and New Zealand, then yeah, I managed to get you some extras that you can't get anywhere else. So check them out. Links in the description. Thanks so much. We'll see you in the next one. Bye for now.